Wow, what a day today. What a move this afternoon. Is that 2 days in a row now? Big moves down. Wait. 2 days in a row. We're now sitting at big time support on the 60-minute chart. We have a low volume Friday coming tomorrow. I'll tell you, these are the situations that are ripe for a short squeeze. Now, I know what you're thinking. Been pretty scary last couple days. Big moves down. I get it. But with the right setups, I think some short squeezes are definitely on our radar for tomorrow. And I've got two very specific trades I'm tracking to capitalize on the short squeeze. And I got a couple bonus trades we'll talk about towards the end of the video tonight. So we have, what an important video tonight. Getting ready. I want to make sure you guys have a game plan to make some money on Friday. Now, before we jump in and get the party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor, will you? Hit that like button for me and give me a shout out, give me a holler. Say hi down in the comment section below. Thank you so much for tuning in, supporting the channel. It's been a great week so far. We got one more day left. My goodness. Now, starting off on the 60-minute charts here on the Nasdaq and the triple Qs, the S&P, the E-mini and the SPY. I like to use the 60-minute chart to help me plan my trades the following day. And then later on in the video tonight, we're going to drill down to some tick charts. I like to use tick charts because they make the entry timing easier. So we're going to cover the broad picture and we'll drill down and talk entry tactics as we go deeper into the video here tonight. Now, what is happening on the 60-minute chart? Well, you probably don't need me to tell you this. We're bearish right now on the 60-minute, but look closer though. Look closer right now. We are now two big legs down here, back-to-back down days like this. Doesn't happen very often. We're sitting at big time support. We talk about measured moves a lot in our free trading classes. NASDAQ definitely hasn't reached its measured move yet, but we're sitting right around those 14,805 half. Those are August lows here. So we're very bearish right now, but two back-to-back big days down, sitting at major levels of support. Like I said earlier, you can almost feel that rubber band pulling back right now and setting up here for a short squeeze. Now, I got a lot we're going to cover here in the video tonight. Going to be careful trying to pick bottoms on this. We'll talk about the best setups to trade that short squeeze here for tomorrow and how to sell some pullbacks as well. Before we jump in though and talk about the entry timing, let's double check our calendar for tomorrow because there are three important things you want to have on your radar. We have the final Fed announcement of the week this week. The Bank of Japan will produce or will announce their rate hikes or rate pauses. Their rate decision will be overnight, so be aware of that. We saw how much that got the market moving when the Bank of England reported overnight. Keep that in mind as the wild card for tomorrow. The second thing, of course, is the PMI composite flash number at 9:45. Anytime we have news around 10 o'clock Eastern time, we always want to pay attention. That's our second item on the list for tomorrow. And the third thing for tomorrow is the Friday mindset. Remember, Fridays are notorious for being lower volume as the day gets older. So my mindset on a Friday morning is to get into trades as early as I can, remove the risk, lock up a small profit, and then I try to leave runners on Fridays because Fridays love to run. They get low volume, they get illiquid. So the mindset tomorrow, early in, remove risk, and try to leave a runner. And if we're lucky tomorrow, if the trading gods are shining down on us tomorrow, we might get that nice big runner in the form of a nice big short squeeze. So keep those on your radar. News again overnight, PMI composite flash at 9:45, and that Friday mindset early in, leave a runner. Now, back to our charts, right? Because it's important to know the schedule for tomorrow, but the money is made on the charts right now. Let's go over my favorite trades here right now. We'll start off on the S&P and the SPY. We'll wrap things tonight on the NASDAQ and the QQQs. These are very similar markets right now, so everything we talk about can pretty much be interchangeable here back and forth between the S&P and the Nasdaq. As I mentioned earlier in the introduction, we have a very strong bear market right now. But again, we've got 2 back-to-back days in a row going lower, and we're sitting right here on major support. Now, we definitely could keep going lower. There's no reason why this market couldn't keep going lower here into, especially with the Bank of Japan announcement tomorrow. But I'd like to find a way to buy during that pullback and then short on the way back down to retest the low. You have to think anytime we see a big move like this, you got to think a pullback and a short back to that low. But I'll bet if we play our cards right, I'll bet we can find some bottoms on this and get in on the way back up around the top of that channel. Let's now drill down to our tick charts. Remember, everything is easier on a tick chart. We use tick charts exclusively in our morning trade room. This is a 7,000 tick chart, upper left-hand corner. And this, of course, is the 21 EMA, in case you're watching here for the first time right now. The most important clue we have on this chart is a big move down today. We had a big move down yesterday as well. And when you put those 2 back-to-back days together, you get the recipe for a nice big bounce up off of this low. Now, whenever I see a big move down, I always think about a 2-legged pullback or a 2-legged correction and a retest of that low. Whenever I see a big move in one direction, I think about a 2-legged correction and a retest of that low, and usually these will give us a nice big bounce off that low. Now, there are ways to make money buying it during the pullback. There are ways to make money selling it on the run back down. And there's one of my favorite trades. There are ways to make money on that double bottom, that reversal off of that low. So we have a lot to cover in the video. There'll be some slight adjustments based on the size of this move down. We talked about if you watched last night's video. So there'll be some slight adjustments, but let's dive right into it. Now, during the pullback, our biggest challenge right now is all of this momentum. As I mentioned last night, anytime we have a move like this, it can keep going, right? It can keep going. I like the idea of buying during this pullback, but because all the momentum right now is bearish, I need some help from the sellers to squeeze them, right? To basically run their stops and run this thing back higher. And what I'm going to do is look for what I call a crown reversal pattern. I got a lot of good emails from you guys trading these this morning. It's a very simple pattern. As we're pulling back, let's hope there are some rookie sellers who try chasing this going lower. If I can get those bears to come in, those rookie sellers, and try a couple times, I can use their stops to fuel that run going higher. Now, look closely at this pattern setup. It's a higher high in price and a trap below that low. Now, in my free trading course, we talk about entry signals a lot in that free video series. And in this one, we'll want to see again, bears try once, bears try twice, higher high in price. That gets the bears locked in, and then we get that trap below that low for that potential squeeze going higher. We don't try to pick bottoms, right? We wait to trap the bears in and squeeze that sucker going back higher. That's how I want to buy this thing as we pull back off the low. And of course, it could keep going lower. I'll keep waiting for that pattern to trigger. Now, talking about selling a pullback right now. I had a channel on here earlier, as you recall, levels of resistance up overhead. I mentioned 2-legged pullback. Now, 2-legged pullbacks are always what I look for whenever I see a big move down or a big move up, a big move in one direction. Now, in the free trading course, we talk about measured moves. Think of a measured move, one leg up, 2-leg up, and think about a measured move going a little bit further than that ABCD or that 100% extension. So we don't exactly know exactly where it is right now, but that's the game plan, the strategy of looking for that 2-legged pullback. 1 leg and 2 legs, and again, it'll be a little bit above that measured move we talk about in the free trading course. Now, after such a big move down the last couple days, we have to assume the potential for this to really rip, especially on a Friday, is going to be a little bit higher today than it was yesterday. So a slight adjustment from the game plan we made in last night's video is to now look for what I call a 2-try failure. We're probably going to see a lot more buyers trying to run this going higher. I'm going to let those buyers try once. I'm going to let them try twice. And once those buyers are committed and trying to, and basically buying into this thing, it's too late. I like the idea of buying off the low. I don't like the idea of buying right here, because anytime we see a big move down like this, you know who's probably waiting up here, right? Are sellers to sell high. So hopefully there are a bunch of rookies who are not watching my videos. They'll try once, they'll try twice, lower low in price, and we can then use their stops to fuel this move as it rolls back down again. Now the target is to go back down to retest that low. And what I'll do in this situation is I'll look for that failure into what I call a pullback combination. Okay, the general idea behind this is to trap buyers above the moving average. And then as it rolls over, I like to grab that first pullback before we rotate and retest that low. Remember, in a big move down, it's a two-legged pullback and then a retest of that low. Now, in the free trading course, I talk about failures a lot, right? Failures are very, very common patterns. This right here, this could be a pullback setup. It could be a trap setup. It could be a failure pattern. I call it a failure into pullback combo. Just kind of keep it simple. And if you're watching for the first time right now, which I know a lot of you guys are here, if you haven't learned these entry tactics, if these aren't making sense to you right now, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link that popped up there. Take that free trading course, because the strategy you'll learn in that short video series will teach you a remarkably simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And most importantly, I'll teach you my 4 favorite entry patterns to help kickstart you making money. Things like failures, traps, crown reversal patterns. You'll learn all of those in that short video series. Oh, and by the way, too, if you can't grab that link up there, I'll put all the important links tonight. I'll put those down in the description of the YouTube video in case you can't get that little pop-up that popped up there. Grab that free trading course. It'll get you moving in the right direction. So now we've got a pretty good idea, right? So now as we're pulling back here right now, we're trapping the bears in, right? With a crown reversal pattern. It's a failure and a trap pattern wrapped together. We then look for that two-legged pullback. Again, think about a little bit more than a measured move. Once we get the two-legged pullback, we're hoping the buyers will come in and get fooled into a reversal. Now, when would it be a reversal? How do I know when it is a reversal, by the way? We'll talk about that here in a moment. Don't go anywhere. Okay, so again, the buyers come in, they try a couple times, we then rope them in, and we use that failure into pullback combination for that run back down to retest the low. Bear trap, buyer failure, pullback combo. Now, the next question is how do I buy off that low? Okay, this could be a very lucrative trade, especially in a day like we have tomorrow after 2 big days down like this. We can't pick the bottom, right? We don't want to pick bottoms, because as we saw today, sometimes these bear markets, they keep on going. But if I can get that nice deep bounce and retest the low. Now think about it. Who's trading down there? Right? Who's trading down there? Not professionals, right? Those are rookies, right? Professionals are going to wait for the bounce, and they'll be taking their profit at that low, won't they? This is a situation where now we can trap more rookies in here now, chasing after it. Let them try a couple times. I'm not a big fan of picking bottoms. I would much rather wait for, in this case, inexperienced traders, rookie traders, to short right into the worst possible place to be selling, and then we can use their stops. We can use their pain, right, for a double bottom reversal. We saw a beautiful one of these on the Nasdaq this morning, as many of you guys emailed us here this afternoon. Now, these 2-try failures, right, 1 try, 2 try, these failure, where does it want to go? It's going to want to go take out that high, right? As we're going, there's one pattern that comes to mind, and that is a bear trap. Now, remember how bear traps work, right? It's a strong run up. It's a higher high in price and a trap below that low. Okay, this is the roadmap. I'll be watching tomorrow morning, right, with both of these markets, S&P and the Nasdaq. It's a crown reversal. Trap the bears in with that trap low, failure/trap pattern. Trap the buyers above the moving average, a failure pattern, failure into pullback combination. Take out that low. Don't pick that bottom. Don't pick the bottom. If the bears get trapped in, squeeze their stops And as we make our way back up to take out that high, look for that bear trap on the way higher, right? Lots of ways to trap traders on the wrong side and make some money on Friday. Now, here's an important question. At what point during that pullback does that become a reversal? At what point does it become a reversal? Let's talk about this, okay? Then we'll go to the NASDAQ, and I'll talk about some ranges for tomorrow because NASDAQ has that range we saw today. It's a little bit different game plan than it was yesterday. Now, let's say we get that two-legged pullback. And we really jump going higher here, okay? How do you know when the buyers have control? There's two things to look for. One is a pullback to the moving average and a jump off the 21 EMA. Okay, didn't happen today, right? But again, if they pull back and hold and jump off that 21 EMA, that jump is a reversal. Okay, could easily happen after 2 big days down like this and a low volume Friday coming tomorrow. Remember, we're not going to buy that first pullback. We'll wait and see if buyers try a couple times and sell into their stops if they fail. But if they do hold that pullback and they do accelerate and run higher, I can now go out, draw a trend line off that high, bring that trend line down off these big lows, look left, find some prior swings, and usually right where those channel and prior swings line up is usually where the money is made on this. Now remember, on this one, it's not just a strong run up. Okay, we expect a strong run higher. They have to hold that pullback off the moving average and jump going higher there. If they can, mark off that high, mark off that low, and I'm going to keep it simple tonight in the video. This could be a trap pattern like I have here. It could be a failure pattern, a pullback combination. There are hundreds of examples of those pattern setups inside that free trading course that I mentioned earlier. So grab that linked up top, right, and learn those entry tactics. The next way to do it is, if we do get that one two-legged pullback here going higher, would be if we begin to pop up and grind going higher. That grind, right? That grind means the opposite side of the market is basically walking away from it, right? They're giving it up now to the buyers. Now, in these scenarios, you want to draw your trend line off the highs, off that grind high, bring it down to that low, and again, look left, find those prior swings, and again, I want to get that first test right off the low of that channel. Now, in situations like this where we're so bearish overall, a retest of that high is the majority of the profit, and then we can look for, remember that double bottom reversal we mentioned earlier ago, right? A few moments ago. That same idea, right? So if they can retest that high now, imagine now buyers coming in trying to buy into that high, let those buyers get trapped and sell into those stops from there, right? So if we do see one of those reversals, either a 1, 2, 3 reversal or a pop and grind reversal, I like the idea of buying off the low of that channel. But again, with being such an overall bear market right now, profit comes off the high and then trap those buyers in with one of those, in this case, a double top reversal as well. All right, so now you know when a deep pullback becomes a full-blown reversal. The big thing right now is will we get our chance here right now to grab that squeeze? And then once we get up, right, then we start thinking about, all right, let's get those buyers roped in, let them try a couple times and short back down to retest that low. All right, I'm excited for this game plan here for tomorrow. I'll get some great opportunity here on what is usually a relatively low volume Friday. Now, I got one more scenario I want to cover here on the NASDAQ. Anytime we have a big move down like this, the following day can oftentimes become a range bound market. NASDAQ, very similar here to the S&P. 2 big days down, right into major lows. Could this thing keep going lower? Absolutely it can, right? They haven't completed the measured move. Measured move's not completed yet. They haven't taken out that 805 half low yet, so we definitely have space to keep going lower. But again, 2 days in a row like this, back-to-back big down days like this, we are ripe for a sharp correction, if not a full-blown short squeeze here for tomorrow. Now, on the NASDAQ, the one kind of big difference in this one is a range involved. Anytime we have a bear market into a trading range and we see a breakout like this, we now start thinking about breakout pullbacks, right? Breakout pullback. We'll use the underbelly of that trading range as a key area of resistance. In all reality, this is very similar to the game plan we talked about a moment ago on the S&P 500 in the sense that the S&P we're expecting to get that two-legged pullback, that retest of that low. So it really fits. It fits in the same mold as we talked about on the S&P. And the game plan is virtually the exact same thing. I don't want to try to pick the bottom. I want to make sure we let those bears get short here, use that crown reversal. Think about now that two-legged pullback, a bit more than a measured move. Trap those buyers in above the moving average, failure into pullback, back down to retest the low. Once they retest the low, what do? We trap in those bears again, let them try a couple times, use their stops as fuel with a failure pattern on the way back up to take out that high. Literally the exact same game plan. The same idea is true on the Nasdaq as well. If we find our way up above that moving average, and all of a sudden now, right, the buyers jump and blast, right, or they pop and they grind, we now know what's probably happening in that situation is the buyers now are hunting for a pendulum swing on the opposite side of that trading range. If you guys are taking my free classes right now, you know that ranges love to rotate. The amount below the range can go above the range. That would be a great runner target. Like I said earlier, mindset for a Friday is early in, leave a runner. It'd be a great spot to leave a runaway or a final small piece of the position open if we get that bounce off the low. All right, now one more thing I want to talk about here for tomorrow, and we mentioned this last night in the video as well, is oftentimes when markets make these big moves down like this, they go sideways into a trading range, right? We saw a great example of this morning on the faster time frames on the Nasdaq. Now, at this point, we are very overextended, right? After two big down days right now, I've got that major area of support right below me. In my free trading classes, we talk about ranges act like magnets, right? So my favorite trade here, really my favorite possible trade always, will be a bear trap below that trading range or a fake out breakout below that trading range. So imagine now we go sideways overnight, we go sideways tomorrow morning around news, and then we see that strong breakdown right into support, overextended, two big down days. This is exactly where we can trap those bears in with those two try failures, those crown reversals, and squeeze the price, right? Squeeze those stops going back higher. Now, again, remember, we're not picking bottoms on this, but as the market makes that run lower and the bears get in down here, we then know exactly where their stops are, and I can look to get this range rotation going higher here. First target for me is always off of the other side of the trading range. The underbelly of this range makes for a great quarter off target there, and then leave that final quarter for the runner. So imagine now, right, again, we go sideways, and this could also happen, by the way, on the S&P. All this is very interchangeable here for tomorrow. We go sideways overnight. We make that run going lower. The bears get trapped in. Let them try once. Let them try twice, because we're so bearish. We're going to use their stops to turn this momentum around, that two-try failure. And again, what I do is I'll take a half off at the other side of that range, a quarter off of the position right at the underbelly of that previous range, because you have to anticipate that rollback lower. And then again, for a Friday, you know what we'll do, right? We'll leave that runner, that quarter runner, up some prior highs, right, and let it run into lunch, into the afternoon. That would be a dream come true scenario there for tomorrow. You could also imagine too that once we get up around the underbelly of that trading range, might the buyers not have the momentum to keep it going? Absolutely, right? So if we start seeing buyers come in and they start trying here, right? If they get above that moving average and they can't keep that thing going, you know what's happening, right? It's holding off the underbelly of that trading range, and this is exactly where we could take that two try failure we talked about a moment ago on the S&P for that run back down to retest that low. Right, so that's going to be the game plan I'm looking for here on the Nasdaq. Nasdaq and the S&P are very similar. Let's hope we get those ranges, because ranges make everything easier. I would love to get that two-try failure, that bear trap, that fake out breakout below that low. And then again, as we go higher, right, does the runner keep on going? take out these highs? Very good chance for that tomorrow with being a low volume Friday. Or do we see these, or do the buyers come in? Do they struggle and struggle into the underbelly of that trading range and then roll back over again? It's that same two-legged pullback into drop back down we talked about on the S&P as well. All right, guys? So what did I miss? What did I miss? Do you agree with this? Do you disagree with this? I would love to know your feedback down in the comment section below. So don't be a stranger in the comment section below. And thank you so much for watching all the way to the end of the video. Now, tomorrow's a Friday. Early in, leave the runner. We've got a great game plan for tomorrow, but you know the markets aren't going to make it easy on us. They're going to be messy. They're going to throw some curveballs at us, and that's exactly why we have our trade room to get together, learn, and trade along every morning at 8 o'clock Eastern Time. I'll put all the important links here for you down in the description of the YouTube video. I would definitely recommend start first on the free trading classes. Get your feet wet, learn the basic strategy, get the wind at your back, and that'll get you warmed up and ready to go for trading with us sometime soon in our members-only morning trade room. If you have any questions or any trouble getting access to our free classes or anything along the way, please don't be a stranger. You can always call the office. Megan and I are always here to help answer questions. And of course, we have live chat in the lower right-hand corner of the website. Right, guys? Hope you learned a bunch here on the video tonight. Hope you use this knowledge, make a killing here for tomorrow. If I don't see you tomorrow morning, every morning in the morning trade room, I will see you guys back here next week. I can't believe final week of September. We'll come back on Monday night and get ready for another busy week next week. Guys, thanks for watching once again. My name is Joseph. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.